complicated with the reassessment proceedings enacted by Finance Act of 2021 and further complicated by Finance Act of 2022 amendments, and further aggravated by the decision of the Honorable Supreme Court, and further, complicated by the instruction dated just about 11th. Instruction dated 11th. Yeah, I mentioned to Sharmaji and took his consent that we would first spend time on law before we get into case law, so that we could appreciate how we could work with the decision of Supreme Court, how we could work with the instruction. But before that, we will have to have quite a thorough knowledge of how these provisions operate. So for this purpose, of course, I would here and there be touching upon the Ashish Agarwal's ratio as well, whenever it is warranted. But then we'll take it up quite at the end, because anyway, a lot of discussions are happening, and I would not say that by now we have completely digested the fallout of the decision of Supreme Court. We have several issues which will get thrown out over a period of time. So we will straight away get on with the topic now. So I would take you through the provision of 147 as enacted by Finance Act of 2022. And apparently it doesn't seem to be greatly different if you look at 147, but then there is a very, very material difference. I'll just read it out for the benefit of myself. If any income chargeable to tax in the case of an assessee has escaped assessment for any assessment year, the assessing officer may, subject to the provisions of sections 148 to 153, assess or reassess such income or recompute the loss or the depreciation allowance or any other allowance or deduction for such assessment year. Hereafter in this section and in sections 148 to 153 referred to as relevant assessment year. Now this is the crux of section 147, main body. Then you have an explanation. The explanation says that for the purpose of assessment, reassessment, recomputation, under this section, the assessing officer may assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of the proceedings under this section, irrespective of the fact that the provisions of section 148A have not been complied with. So this is the core of section 147. Before we would go to the changed 148, the newly brought in 148A, etc., we will just look at the section itself. Now, if you would see this provision, you will see that the words reason to believe do not exist. You would wonder whether the various decisions which I've talked about, the assessing officer have reason to believe. And what is reason to believe? So you will have to have the tangible evidence, which shall have live nexus with your subjective opinion, that the subjective belief rather, not the opinion, that the income chargeable to tax is escaped assessment. You would notice that 147, the words reason to believe are no more available. Supreme Court in Kelvinator, as you would know, has said that the power under 147 is not a power to review. It is rather a power to reassess. Now, the basic edifice of section 147 has not changed in as much as it has not conferred the power of review to the assessing officer. The power that remains is only to assess or reassess. To that extent, there is no foundational change of section 147. Whatever they may bring in later on, in place of reason to believe, they have brought in information suggesting escapement, which we would discuss a little later. By any stretch of imagination, they cannot carry out a review, in my humble opinion, because the power remains with them only to assess or reassess. To that extent, I would feel that the ratio of Kelvinator still holds good. One more aspect that needs to be considered here is that the Supreme Court in Kelvinator said the phrase change of opinion is not found in 147 literally. However, Supreme Court said this phrase has to be read into section 147 to avoid abuse of power, to avoid, making it completely discretionary, whereby it will then become totally arbitrary. For this purpose, the Supreme Court read the change of opinion into the text of section 147. I don't see a warrant to move away from this principle, because even now in the change system of 147, as I've said earlier, there is no power to review. It is only a power to assess or reassess. And therefore, the moment you allow change of opinion, that will translate the power to assess to power to review. So which power is not available. Therefore, whatever Supreme Court has said, in my opinion, on change of opinion, which has to be read into the scheme of section 147, would apply mutatis mutandis to new provision as well. Now, the reason to believe is no more available. I would rather say that this will not make provision wider. This is rather made provision narrower. There is one way of looking at this reason to believe, because these terms, this phrase is not defined. Your belief could have been anything. Sky is the limit. Only thing is you needed to have tangible evidence. You could have believed on any damn thing, and the Rajesh Javeri 291 ITR 500, the Supreme Court said the reason to believe is not equivalent to finally establishing that the income has escaped assessment. It is just a supposition that the income may have escaped assessment. Now, in place of that, you have information suggesting escapement of income, as is given in section 148, explanation 1 and explanation 2. They are completely circumscribed and they are exhaustive in nature as compared to reason to believe, which could be quite broad in nature. As we would discuss explanation 1 and explanation 2 to section 148, we would get to know more about it. Now, one another important change in the body of 147, if you would juxtapose the old 147 and the present 147, the old 147 said that where the assessing officer has a reason to believe that income has escaped assessment, then he may proceed. Now, the words reason to believe are missing. Under the older regime, it is sufficient for him just to have a belief, for him to invoke powers under section 147. Now, look at the language of newly enacted 147. If any income chargeable to tax in the case of an SEC has escaped assessment for any assessment year, it looks like the assessing officer ought to have first established that the income in fact has escaped assessment, not just the supposition. So the so-called supposition that the income may have escaped assessment, which was read into reason to believe by the Supreme Court in Rajesh Javeri, may not apply now. If you look at the language of 147, jurisdiction is assumed not when there is just a reason to believe. The jurisdiction is assumed when any income chargeable to tax has escaped assessment. I agree that this could be quite an aggressive way of looking at it. Because if you look at 148A clause D, after doing the procedure of 148A, the assessing officer will pass an order under clause D to say that it's a fit case for issue of notice under section 148. Then he goes ahead and issues notice under section 148. That is when he will assume the jurisdiction. Then he'll come to section 147. When he comes to section 147, of course, any assessment can happen only if the income has escaped assessment. This was the position earlier. This is the position now. Eventual assessment can be only in the event of a factum of escapement having been established. If no income chargeable to tax has escaped assessment, be it under older regime, be it under newer regime, reassessment is impermissible. However, the starting words of 147 could be quite relevant, which I would explain, particularly when notices have been issued just before 31st March of 2021. You are aware that all the cases before about 9 high courts in this country, and all the cases which are before the Supreme Court, the 90,000 plus so-called cases as claimed by the learned ASG before the Honorable Supreme Court, They are all relating to notices issued on or after 1st of April of 2021. What about the notices that have been issued a little before 31st March of 2021? And how are those notices to be dealt with post 1st of April 2021? The words that are missing in section 147, insofar as reason to believe are concerned, could make a material difference. We'll come to it a little later. But just keep this in mind that the basic edifice of 147 as regards reason to believe has undergone a change. Those words are no more relevant here. And therefore, anything that has been invoked earlier on the basis of reason to believe will lapse by enactment of new law under 2021. Now, before we would go about the notices that have been issued just prior to 31st March of 2021, we look at certain other provisions. Now compare 147 in the current regime with the 147 in the past regime. Interestingly, the older 147, third proviso, very clearly provided. See, first and the second proviso of erstwhile section 147 only dealt with your failure to make full and true disclosure, the protection you would have had of 4 years where you had made a full and true disclosure. And that protection would not be available even if you have made a full and true disclosure if the income that has escaped assessment relates to an asset that is located outside India. Those two provisos are no more applicable now in the new regime. So go to third proviso of the old regime, which says assessing officer may assess or reassess such income other than income involving matters which are subject matters of any appeal, reference, or revision, which is chargeable to tax and escaped assessment. So what is this? If an order of assessing officer has become the subject matter of an appeal, revision, or reference, then if law is silent on it, one view could be that the order of the assessing officer is merged with the order of the CIT appeals, or with that of the commissioner, or with that of the tribunal. So once the order of an inferior authority has been taken to the superior authority in appeal, whether or not the superior authority will modify it or just confirm it, certain courts have held that there's a complete merger and the order of assessing officer does not exist anymore. The absence of, you will notice that the new 147 doesn't have a provision similar to third proviso of the erstwhile 147. So would that now mean that going forward, if your assessment order has been subject matter of appeal, reference, or revision, is AO divested of his powers completely? Is a point that is requiring consideration. So if you look at various decisions, for example, if you look at the Kerala High Court decision in Vaikundam rubber case, 249 ITR 19, you will look at Supreme Court decision in Radhaswamy Salt Works case, your Karnataka High Court decision in VF Arvind Brand's case in the context of sales tax. You have Allahabad High Court decision in JK Synthetics. You have an old decision of Bombay High Court in Tejaji, Farasram, Karawala. So if you look at the text of this decision, look at the last lines there. In this case, although the appellate assistant commissioner may not have disagreed with the ITO and may have confirmed the order, the ultimate order of assessment, which was in operation, was the order of appellate assistant commissioner confirming the decision of the ITO. So what the Bombay High Court in Tejaji's case says is that the moment it has become a subject matter of appeal, irrespective of whether the superior authority is buried with it or just confirmed it, the inferior authority's order would not survive. If this view is accepted, then it would not be permissible for the assessing officer to touch your case the moment you have taken it in appeal. Now, there could be some difficulty here because not all courts are in agreement with this. There is a subsequent decision of Bombay High Court in Saxaria Cotton Mills case, which followed a Supreme Court decision in State of Madras versus Madurai Mills in a sales tax matter, 19 STC 144. Look at what the Supreme Court has to say, which was later on reiterated in Gujarat High Court in Kasanda's case and Punjabai's case. Supreme Court in Madurai Mills case declares, but the doctrine of merger is not a doctrine of rigid and universal application. And it cannot be said that wherever there are two orders, one by the inferior tribunal and the other by the superior tribunal, passed in an appeal or revision, there is a fusion or merger of two orders, irrespective of the subject matter of the appellate or revision order and the scope of appeal or revision contemplated by the particular statute. In our opinion, the application of the doctrine depends on the nature of the appellate or the revisional order in each case and the scope of statutory provisions conferring the appellate or revisional jurisdiction. Now, this is extremely important. So what Supreme Court says is it doesn't rule out the doctrine of merger theory. It only says it is not a doctrine of rigid and universal application. In a given situation, it may apply. In a given situation, it may not apply. Look at the last three lines. Application of the doctrine depends on the nature of appellate or the revisional order in each case and the scope of statutory provisions conferring appellate or revisional jurisdiction. Scope of statutory provisions conferring appellate jurisdiction. What does it mean? It means, take a look at section 251. When you take the matter in appeal to the CIT appeals, CIT appeals have the plenary power to even make an enhancement. Now, with this kind of power that is conferred on the CIT appeal, read in the light of what Supreme Court in Madurai Mills case saying at the end, that it depends on the scope of the statutory provisions conferring the appellate jurisdiction. So the powers of CIT appeal are coextensive with that of the assessing officer. He has the powers to even carry out an enhancement. And if he wouldn't do it, the commissioner would have power, particularly after the amendment and explanation. He can consider under various situations the order of the assessing officer erroneous so as to be prejudicial. So powers are available to the superior authorities once the matter is taken in revision or is taken in appeal. Therefore, the legislature in the new dispensation, not continuing the language of the third proviso of the old regime, could only to be understood as thinking that the legislature did not want the partial merger theory. They have now endorsed full merger theory, meaning if your order is taken in appeal, if your order is taken in revision, the assessing officer would have no powers to do it. If you look at the similar provisions under 154(1)(a) and under section 263 explanation 1C, they specifically provide for partial merger, like how the erstwhile third proviso to section 147 provided. The absence of a language similar to third proviso could mean in a given situation that the AO does not have power in respect of an order that has been taken in appeal. Now, look at this explanation to section 147. Section 147 says, there is an explanation to 147. It says that, as I said earlier, for the purpose of assessment, reassessment, or recomputation, the assessing officer may assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of proceedings under this section, irrespective of the fact that the provisions of section 148A have not been complied with. So this is paramateria to explanation 3 of section 147, except the last line. The last line of erstwhile explanation 3 read like, notwithstanding that the reasons for such issue have not been included in the reasons recorded under section 148(2). So he was not required to have recorded reasons if in the course of a validly assumed reassessment proceeding, he comes across certain other income which is chargeable to tax but may have escaped assessment. He could have assessed or reassessed, or he could have assessed or reassessed the same without having to record the reasons. Now, in the place of these words, notwithstanding that the reasons for such issue have not been included, now what they have said is, irrespective of the fact that the provisions of 148A have not been complied with. So, would that make any difference here? Would it mean now that the power which the AO had in the older regime continues in the new regime as well without any change? If you look at one another change which has to be seen along with this, is that in the main body of erstwhile 147, main body of SY 147, not explanation 3, the main body, these additional words were found. And also any other income chargeable to tax, which has escaped assessment, which comes to his notice subsequently in the course of proceedings. So these words are missing in the present 147. Now, a question that would arise is, because these words are missing, is it that the main body would not permit the AO to assess any other income? Or alternatively, would it mean that 148A may have been dispensed with, but he still has to issue notice under 148, and attendant condition of information suggesting escapement should be satisfied? So this would depend on whether the words which are appearing in the S12 section 147 and also any other income, are these words enabling powers or restricting powers? For example, if you look at two decisions, one of Bombay High Court in Jet Airways and one of Delhi High Court in Ranbaxy, they have said that these are restrictive in nature. That means the assessing officer, if he wants to tax any other income that comes to his knowledge, he should have first taxed that income in respect of which he has initiated reassessment. Having initiated reassessment in respect of income A, if he would not assess income A, he would not be in a position to assess income B or C that may come to his knowledge. But then the Karnataka High Court in Govindraju case in 377 ITR 243 did not agree with the ratio of Ranbaxy and Jet Airways. It has said that and also should not be understood as restrictive. It is just clarificatory in nature. So if you look at this, it appears that the omission of these words in section 147 appears to reaffirm what is stated in Govindraju and could possibly overrule Jet Airways and Ranbaxy, because Jet Airways and Ranbaxy gave enough of significance to the words and also. And therefore, they have said that if you have taken up the reassessment on item A, unless you assess item A, you can't be allowed to assess item B and C because of the use of words and also. Now that those words are missing, it could be understood that the Parliament has empowered the Income Tax Department to, for example, they have raised the issue on A, they could assess B or C, which would come to their notice, irrespective of whether they have assessed item A or not. So this is one analysis. Of course, I'm sure the learned delegates could, obviously be in a better position to make different inferences. Now, one another important point that needs to be understood is, in the new dispensation, is it necessary to issue 143(2) notice? So if you look at the old 147, it never ever stated very vocally that 143(2) notice should be issued. However, there are two provisos and one explanation in the old 148(1), which stated that the notices under 143(2) issued during 1/6/1991 to 30/9/2005, though issued beyond the due date but before the due date for completing assessment, are deemed to have been properly issued. And the explanation which followed these two provisos stated that this fiction would not apply to notices issued on or after 1/10/2005, which indirectly meant that the issue of notice under 143(2) is mandatory. The position has not undergone change even under the new dispensation. And the ratio of Blue Moon's case, though in the context of 158 BC, should very much apply even to 148. And therefore, it is important that despite these provisos are not available in new section 148, on the basis of Supreme Court's ratio here in Blue Moon's case, it has to be understood that the notice under 143(2) will have to be necessarily issued. Now, of course, I would not take much of your time on the interplay between when an assessment is reopened. Is it that the entire reassessment is thrown open, like what Jagmohan said, or contrarily, what Sun Engineering said? No, entire thing is not open. They understood Jagmohan in totally different manner. Then in Srihari case in 258, they have said on the basis of the order passed by the assessing officer, it could be stated that the order which is passed under 147 is a wholesome order, and the earlier order ceased to exist. So leave that out. But if you look at the scrutiny guidelines issued by the department itself on 11/5/2022, just about 2 days before, for financial year 22-23, if you look at the table there at serial number 4, it indicates that issue of notice is mandatory under 143(2), even for an assessment under new regime. And if you look at 144(b)(1) clause 3, the phaseless assessment would apply after they have notified the scheme under 151A for reassessment. Even the reassessments under 147 also have to be carried out in a phaseless manner under 144B. Subsection 1 clause 3 will mandate issue of notice under 143(2). So in sum and substance, despite the absence of two provisos and explanation which existed in the erstwhile 147, which would not exist now in the current regime, it could be comfortably stated that the department has a mandate to issue 143(2) notice once you file your return under 140(18). Next issue is if you would compare old 147 and new 147, the old 147 said that he could have not only assessed and reassessed, he could also have recomputed the loss or the depreciation allowance or any other allowance, as the case may be. So if you compare that with the present regime, it says recompute the loss or the depreciation allowance or any other allowance or deduction. So the word deduction has been added here in the new dispensation. So I tried to spend some time on whether the addition of deduction would make it more onerous on taxpayer. But I found that, if some deduction is recomputed, it is like, assessing or reassessing such income. And therefore, we could only understand that the use of word deduction is only as a measure of abundant caution. It is not that a wrongfully allowed deduction was never disturbed under the older regime. They happily, disturbed it under older regime as well. That is one aspect. The other aspect is extremely important: sequence of filing of your return. Under the old law, as you are aware, 259 ITR 19 GKN, you have to first, once the notice comes, file a return. You don't even know what the reasons are. You have to file a return. Then you ask for reasons, get the reasons, file objections, avoid the order of overruling objection for you to proceed further. Under lieu now, it is not so. First, you get a notice under 148AB. EO is expected to supply to you the information suggesting escapement. He is also expected to supply to you the result of the inquiry which you would have conducted under 148A within brackets A. You will have to respond to the same, get an order and get a speaking order under 148AD. Then you get a notice under 148. Then you have to file the return. Meaning what? In a given case, you may choose to include even the so-called escaped income in a return, which wouldn't have been possible earlier because many a times you wouldn't have known what the reasons are and you would have just gone ahead and filed the return. And as you know, most assessors do what do they do? They will, those days in the manual time, they would write that the old return will have to be construed as new return. Now they just e-file with the same numbers, because you would never had the benefit of reasons to believe. Now you will have the benefit of a speaking order under 148AD. So you have the ability to include if you would want to. But then why will you have to include? If you include it yourself, and it becomes very difficult for you to go back on that later on, and the assessing officer will be too happy to just assess it. Would it help you in terms of avoidance of penalty? Will this be a case of, underreporting? So you'll have to go to section 270 capital A here. If you go to 270 capital A subsection 2, let us take a case where I had returned 1 crore of total income originally. Now, under the new law, I get an order under 148A followed by notice under 148. Now I know that the AO is proposing to add another 2 crores. I think I may not have a very good case here. Question is, should I include or I should not include? If I would include it in my return, 1 crore become 3 crore and the assessing officer will assess it. Now, will I be liable for penalty? even that return will get processed under 143(1). So if you look at 270A subsection 2 clause A, the delta on which you'll have to pay penalty is only if the income assessed is greater than the income determined under 143(1)A. That would not be the case here. So you'll not come under A. However, you may come under C. It says income reassessed is greater than income assessed or reassessed immediately before such reassessment. See, if earlier you were assessed for 1 crore, meaning 143(3) order was passed, you were assessed for 1 crore. Now you would get a notice and you would know that another 2 crores will have to be added. Supposing you would add those 2 crore in your return and assessing officer will then reassess it at 3 crores. Then you could get hit by clause C because it compares income reassessed not with the income return, but income previously assessed. So therefore, if you are previously assessed, you could get hit even if you would include it in your return of income. In one situation, possibly you may think of not being really hit. Is a case where you had filed your return of income under the normal provision of 1 crore, which is not assessed under 143(3). It was only processed under 143(1) at 1 crore. Now comes a reassessment notice in terms of 148 and 148A. The 2 crores will come. So if you would add the 2 crores and file your return, you are okay under A. You don't get caught under C as well, because for C to come under 270 capital A subsection 2, income reassessed is greater than income assessed or reassessed immediately. You are not assessed immediately prior to that, because what was done was only 143(1). Rajesh Javeri Supreme Court says 143(1) cannot be called as assessment. So therefore, in that case, it may make sense for you to include it in your return of income and then come out of penalty. So this is just one, the thought process which we looked at to see whether, you could apply it in a given situation. Now, before I go to other 2 sections, which are very, very important, we will also notice that 2 important provisions have not undergone any change, despite the change in regime. One is section 150. You know that section 150 says that notwithstanding anything contained in section 149, it is open to the assessing officer to assess, reassess, or recompute in consequence or to give effect to any superior forum's order under Income Tax Act or order of any court under any proceeding under any law for time being enforced. So time limit of 149 wouldn't have applied. This provision continues intact in the new regime. There's one more provision which could be quite interesting. Not many of us would make use of it. Is 152. The 152 also continues. See, 152 subsection 1 wouldn't matter much. 152 subsection 2 is important. And you could take defense of this particular provision even now. What does this provision say? It says where an assessment is reopened under 147, the assessee may, if he has not impugned any part of the original order, he may claim that the proceedings under 147 shall be dropped on his showing that he had been assessed on an amount or to a sum not lower than what he would have rightly been liable for, even if the income alleged to have escaped assessment had been taken into account. Meaning what? There was some income that may have escaped according to assessing officer. You are eligible for parallel deduction in respect thereof. So you are able to establish that, okay, even if you take the escaped income, because you had not claimed the deduction would neutralize the so-called extra income, and therefore the proceeding under 142 should be dropped. You could also possibly try to use, if not directly, that post issue of notice, if there is a favorable ruling saying that this income is not chargeable to tax, maybe jurisdictional high court or the Supreme Court or whatever. If not directly, at least you could take a leaf out of section 152 and urge before the assessing office. Look at the Supreme Court decision. Look at the High Court decision. For example, take the case of equipment royalty. Take the case of the bandwidth charges which you pay to a non-resident, which earlier the courts held that, at least some courts held. For example, the very zone of Madras High Court held that it's chargeable to tax, and those explanations which are added to section 916 would also be read into the treaty. But then the Delhi High Court news case said no, they should not be read into treaty. Supreme Court in engineering analysis has confirmed news case. So in the meanwhile, the notices would have been issued by various jurisdictional assessing officers. You could now argue on the basis of this decision, taking leaf out of 152, that look, Supreme Court has stated that these explanations do not override the treaty. It would not apply if I'm covered by the treaty, and therefore reassessment need not be carried out. Sharmaji, with this, maybe we can avoid questions, or you would want me to continue discussing next section?
Hello. Sanjay,
Sharmaji, should we take a pause and wait for a couple of minutes so that there is a break from monotony, or you would want me to continue?
There are no questions as such, sir. So I would request you to continue with the this thing.
Okay.
Very well. Now with this, we'll go to the next section. 148. So 148, title of the section has remained unchanged. Issue of notice where income has escaped assessment. The text of the section has undergone the change. Before making the assessment, reassessment, or recomputation under section 147, and subject to the provisions of section 148A, these words have been added by FY 2021. That means whatever you do under 148 is subject to provisions of 148A. The assessing officer shall serve on the assessee a notice. Then, along with a copy of the order passed, if required, under clause D of section 148A. These words also have been added. So two phrases have been added. And subject to provisions of section 148A have been added. The second phrase, along with a copy of the order passed, if required, under clause D of section 148A. These two phrases have been added. But for the addition of these two phrases, this section is in parametria, same as old section 148. Anyway, for the sake of completion, I'll read this out. Before making the assessment, reassessment, or recomputation under section 147 and subject to the provisions of 148A, the AO shall serve on the assessee a notice along with a copy of the order if required passed under section 148AD, requiring him to furnish within such period as may be specified in such notice a return of his income or income of any other person in respect of which he is assessable under this act during the previous year corresponding to the relevant assessment year in the prescribed form and verified in the prescribed manner, and setting forth such other particulars as may be prescribed, and the provisions of this act shall, insofar as may be applied accordingly, as if such return were a return required to be furnished under section 139. The ending words are just the same as the erstwhile 148, and therefore the issue of notice under 143(2) continues to be mandatory even after the amendment to section 148. So what it only says is whatever you do here will have to be subject to provisions of 148A. Now comes the most important thing. You have two provisos. These provisos did not exist earlier. Provided that no notice under this section, meaning no notice under section 148, shall be issued unless there is information with the assessing officer which suggests that the income chargeable to tax has escaped assessment in the case of the assessee for the relevant assessment year, and the assessing officer has obtained prior approval of the specified authority to issue notice. So the first proviso has two limbs. First limb is what? You couldn't have issued notice on 148 unless there is information with you suggesting that the income chargeable to tax escaped assessment in the case of the assessee for the relevant assessment year. These words are very critical. Keep them in mind. In the case of the assessee for the relevant assessment year. Because these words are important as you discuss explanation 1, which will define the meaning of information suggesting escapement of assessment. And second limb is assessing officers obtained prior approval of the specified authority to issue such notice. So twin conditions have to be satisfied. So when 2021 came in, this was the only proviso. Then 2022 brought in one more proviso. Said that further that no such approval shall be required. Second limb is dispensed with, where the AO, with the prior approval of the specified authority, has passed an order under 148 AD to the effect that it's a fit case to issue notice under this section. So basically what they've done is, they've realized that anyway before passing the order under 148 AD, the AO would have obtained the approval of the specified authority. Then the issue of 148 is a mechanical task. Once it is said in the order of 148A, that's a fit case to issue notice. So therefore, one more approval may not be required. But however, approval may still be required, which as you would know later on, wherever by virtue of proviso to 148A, the 148A procedure is dispensed with in some cases. See, in most cases, he has to follow 148A. But there is a proviso to 148A, which we're going to discuss a little later. Under this proviso to 148A, AO need not follow 148A procedure. He can straight away go ahead and issue 148 notice. In such case, the second limb of the first proviso, which will require you to obtain the approval of the specified authority, will continue, is what you have to keep in mind. Now, explanation 1. This is the most critical part of section 148. For the purposes of this section and section 148A, the information with the assessing officer which suggests that the income chargeable to tax has escaped assessment means. See the phrase income with the assessing officer which suggests that the income chargeable to tax has escaped assessment is too long a phrase for me to keep using this at all places. So in short, I will name it as, with an acronym as ISE, meaning information suggesting escapement. So kindly bear with me whenever I would say ISE, you have to understand this as information with the assessing officer which suggests that the income chargeable to tax has escaped assessment. So explanation 1 says ISE means 1, 2, 3, 4, 5. 5 items exist. Item 1. Any information in the case of assessee for the relevant assessment in accordance with the RMS formulated by the board from time to time. I'm going to discuss each one of this in detail later on. This is, so I'm only now trying to just take you through what are these 5 items. I'll then, in depth go through them. Any information in the case of assessee for the relevant assessment in accordance with the RMS formulated by the board from time to time. 2. Any audit objection to the effect that the assessment in the case of the assessee for the relevant assessment year has not been made in accordance with the provisions of this Act. 3. Any information received under an agreement referred to in section 90 or 90A of the Act. 4. Any information made available to the AO under scheme notified under 135A. 5. Any information which requires action in consequence of the order of a tribunal or a court. So these are the 5 situations where the ISC would exist. Now, this is a case of actual ISC. Now let's go to explanation 2. Is a case of deemed ISC, where it is deemed that the information suggesting escapement is with the assessing officer. What are these situations? There are 4 situations here. This also I will discuss in greater detail later on. Now I'm only trying to tell you what they are. If a search has taken place or a requisition has taken place in your case, then the fiction operates. There is a deemed ISC. If a survey takes place, except the TDS survey, there is a deemed ISC. The survey such takes place in somebody else's premises. Assets found are found to be belonging to you. Then in your case, there is a deemed ISC. Similarly, such takes place in somebody else's premises. A requisition takes place in respect to somebody else. The books of account documents seized or requisitioned over there may pertain to you, or the information contained therein may relate to you. Then in your case, there is a deemed ISC. So basically, search and survey cases are deemed ISCs. I will deal with each one of the item little later in greater detail. Now, explanation 3 says specified authority means specified authority referred to in section 151, because in the first proviso, second limb. So before issue of notice under 148, the assessing officer is required to obtain the approval of the specified authority. Who is the specified authority? Referred to in 151. Now, with this, we will now make a clinical analysis of section 148. What are the preconditions for issue of notice under 148? Firstly, an order under 148A is passed, except where it is dispensed with. As I said earlier, proviso to 148A will dispense with the procedure of 148. That is only dispensed with. In all other cases, 148A order has to be passed. The assessing officer has either ISC or deemed ISC. That means information suggesting escapement or deemed case of information suggesting escapement. And AO has obtained the prior approval of the specified authority. Prior approval, extremely important. Not post facto approval. Prior approval has to be obtained. As I've already explained to you, this could be dispensed with where the order under 148A has already been passed with the approval of the specified authority. Now, see the first proviso to 148 says, no notice under 148 shall be issued unless the AO has information suggesting escapement. But it does not mean that in all the cases of information suggesting escapement, notice has to be invariably issued. Because existence of ISC or deemed ISC is just a trigger. Merely because the AO has ISC, he cannot go ahead and issue notice at 148. He has to follow the procedure of 148A. Meaning what? He has to give you notice under 148A, clause B, give you the so-called information suggesting escapement. If he's carried out any inquiry, he will have to give you share with you the results of the inquiry, give you a show cause notice, hear you, pass an order. So the whole process of 148A is like a machine in which the raw material that the ISC is put in, and what comes out is a certificate of fitness. That's a fit case for issue of notice under 140. This is the finished product. The raw material is in the form of ISC. In other words, what I'm trying to say is ISC, though is a precondition, is not by itself sufficient to issue notice under 148. The ISC will have to be put into the machine of 148A procedure, and the finished product, that is certificate of fitness, that's a fit case for issue of notice under section 148 will have to be emerging. Then only you could issue notice under 148. This is again subject to caveat that the first proviso to 148A, if it dispenses with 148A, then this would not apply, whatever I've said. Mere ISC should be good enough for the purpose of proceeding. Now, the first proviso says, no notice could be issued unless there is information with the assessing officer which suggests that the income chargeable to tax has escaped assessment, unless there is ISC. But it doesn't stop there. It says, in the case of the assessee for the relevant assessment year. So you will find when you go to explanation 1 or explanation 2, the meaning of ISC and DSC, some places they would not have stated in the case of the assessee for the relevant assessment year, but they have to be read in. For example, information collected under section 90 will have to be relating to assessee for the relevant assessment year. These words are not there in explanation 1, but they have to be written because of these words which exist in the proviso. And if we go to explanation 1, which will define ISC, it uses the word means. ISC means 1, 2, 3, 4, 5. So which necessarily means that it is exhaustive. And in order that assessing officer says there is ISC, it has to fit into one or more of 5. And before that, it has to qualify as an information. It is information suggesting escapement. But they are not defined what is information. They only define what is information suggesting escapement. And if we go to explanation 1, clause 1, it says any information. Clause 3, any information received. Clause 4, any information made available. Clause 5, any information which requires action. What is the meaning of information? There is a very good decision of Supreme Court in the context of sales tax. L&T's case versus L&T versus State of Jharkhand, 2017, Tax India Online 129. Supreme Court says, what is information? Information means facts told, heard, or discovered about somebody or something. It cannot just be a hearsay. It's the act or process of informing. It means an instruction or knowledge derived from an external source concerning facts or parties, or as to law relating to and or stroke or having bearing on the assessment. This is extremely important. It cannot be extraneous to income tax. It cannot be extraneous where it has no bearing on your assessment. So information here, in the case of assessee for the relevant assessment here, has to have bearing on its assessment. It cannot be extraneous. Now look at the next sentence. A mere change of opinion or having second thought about it by the competent authority on the same set of facts and materials on the record does not constitute information. This is extremely relevant because, as I've told you earlier, little ago, about the change of opinion that has to be read into section 147, as otherwise there will be abuse, as feared by Supreme Court. And the power is only the power to assess or reassess, not power to review. So you'll have to understand the information also in that light. To say that information would not include having just a second thought about the materials already with you, or a mere change of opinion. It is not information. But the last words are also to be read because they appear to slightly take a broader position to favor the revenue. But the information used in the aforesaid section is of the widest amplitude and should not be construed narrowly. It is in the context of the sales tax law of Jharkhand. It comprehends not only variety of factors, including information from external sources of any kind, but also the discovery of new facts and information available in the record of assessment, not previously noticed or investigated. That is because in the Jharkhand state law, they just said information. Whereas in our case, it is not just the information. It is information circumscribed by 1, 2, 3, 4, 5 in explanation 1. Therefore, in my opinion, the last sentence cannot be blindly applied in the instant case. Now, one another thing is, merely because you have a case coming under clauses 1 to 5 in explanation 1, it will not, according to me, qualify as ISC. See, ISC, as I said, information, it has to have a bearing on the assessee's assessment. Therefore, it has to inherently carry with it the phraseology of income escaping assessment. So the information that comes, for example, you may get some information under section 90, which by itself may not be sufficient to say that there is an escapement of income. So this is possibly why the circumscribed information and they subject it to churning under 148A, and eventually the finished product of certificate of fitness will have to consider all this. And this information which is used in explanation 1 will have to be subjected to very rigorous test under 148A. Ultimately, it has to convey that the income chargeable to taxes escaped assessment. Now, one important point here. There is a change between Finance Act 2021 and Finance Act 2022. In the Finance Act of 2021, this explanation 1 had only 2 items. One is almost the same as the present one, that is information flagged. The word flagged has been removed. Otherwise, it's just the same. With effect from 1/4/2022, flagged has been omitted. Now, clause 2, there was C&AG final audit objection. Now they have removed the word final and removed the word C&AG. Any audit objection they have brought in. 2 changes. That apart, they've added items 3, 4, and 5. The information collected under 1990 capital A, the information made available under 135A, the information which requires action in consequence of order of a tribunal or court. These 3 have been added. Now the important question for consideration is, when a notice, whether amended provisions should be seen or older provisions should be seen. Normally, whenever there is ISC, the AO will have to issue notice under 148A and will have to furnish the same to you. So that means the legal position of what is ISC will have to be seen on the date of issue of notice under 148A. That means what? All the notices under 148A that have been issued prior to 1/4/2022, the unamended explanation alone would apply. So information flag, final objection of C&AG alone would apply. Other three items which have been added would not apply if the notice has been issued prior to 1/4/2022, because there is an inherent duty with the AO that along with the notice, he has to give you the information. Now let us take a case where on 25th of March of 2022, you have received a notice under 148. On what basis could that have been issued? On the basis of ISC unamended, not the amended by, not the one that is amended by 2022. Now you get a notice. You have the information suggesting escapement on the basis of earlier explanation one. During the course of proceeding under 148A, it is not permissible for the assessing officer to improvise on your ISC on the basis of amendment. There is no scope for doing it. He cannot allow ISC to grow on the basis of amended explanation one. You could take an example. Look at section 150 subsection 1, which permits the assessing officer, irrespective of time limit under 149, to assess, reassess, or recompute in consequence or to give effect to any finding or direction. Now, after 1/4/2021, in consequence or giving effect to are not there in ISC. They're not there in ISC. Unless it comes as RMS, which the board has to make it available to us. Otherwise, a court direction is not ISC. So what 150 did is only to dispense with the time limit. Because it was not forming part of ISC, during 1/4/2021 to 31st March 2022, on which basis the notice could have been issued. Now, look at the latest decision of Supreme Court in Ashish Agarwal's case. What did the Supreme Court do? The notices issued under 148 are deemed to be notices under 148A. It means in the Supreme Court, in all those so-called 90,000 cases, all the notices have been issued prior to 31st March of 2022. After 1/4/2021, but 31st March of 2022. Those notices were wrongly issued under old law. What Supreme Court did in exercise of its power under Article 142 of the Constitution, Supreme Court, held the cudgels for the revenue and created a fiction saying that the notices issued in 148 shall be deemed to have been issued under 148A. That means all those notices that have been issued post 1/4/2021 prior to 31st March of 2022 are now deemed to have been issued under 148A. They have been issued under 148A, and therefore they could be only on the basis of ISC as per FA 2021 and cannot be as per ISC as per FA 2022. So all those cases covered by Supreme Court will have to survive or fall on the basis of ISC as existing by FA 2021, unamended by FA 2022. This itself should help you pull out so many cases out of reassessment. Now, let us look at each of these clauses. Take clause 1. Any information in the case of assessee for the relevant assessment in accordance with the RMS formulated by the board from time to time. So it has to be in accordance with the RMS formulated by board from time to time. If you would look at, there are two instructions which we have traced. One is dated 10/12/2021. for assessment year 1516 and 1819. This dealt with a situation where assessing officers were asked to upload in their verification report utility all these cases of risks. They have in fact given on a list of cases, situations. So what do? Through this instruction, they have told the assessing officer, look at these guidelines. Wherever your case will come under any of these guidelines, upload it in the verification report utility. So it will be available with the central server. Then by using artificial intelligence and the machine learning, which are not intelligent enough to understand both the terms, these two are applied by the department to determine a case of FSC, ISC rather, information suggesting escapement. Then this would be disseminated to by automatic allocation process to various assessing officers across the country. And this would happen by way of scheme under 151A, read with 144B, and the scheme under section 135A. So this is how you would possibly get to know what is the RMS by the board from time to time. Then you could notice two more cases. One of 4/3/2021 instruction, other of 15/3/2021. One dealing with domestic, the other one dealing with international. They have been amended subsequently by two more amending notification. Also have dealt with this RMS. So question now is, whatever instruction they have said, could there be RMS within that? Or at the back of you, could they have any other RMS? In which case, can you ask for the details through, RTI is a point that needs to be considered. Next is RMS formulated by board from time to time. So time to time, they keep changing. When they keep changing from time to time, which RMS will have to be applied in your case? So the argument could be that the RMS question would arise at the time when you would issue notice under 148A, because you are invoking explanation 1, clause 1. So at that time, you'll have to see whatever is the RMS. Then you will have to do that. Can the RMS suggest fishing and drawing inquiry? As I said earlier, information cannot be vague. But information need not be foolproof. Because if you look at the language of 148A, clause A, it will permit the assessing officer with the previous approval of the specified authority to carry out inquiry on the basis of ISC, which means it need not be foolproof. At the same time, it can't be too vague. So can a fishing and drawing inquiry be done? They have permitted them to do it, provided they follow the procedure of prior approval of specified authority in terms of 148A within brackets small a. Now, we'll go to second item. Any audit objection to the effect that the assessment in the case of the SSC for the relevant assessment has not been made in accordance with the provisions of this Act. So earlier it was C&AG and final. Now they omitted the word final. They omitted the word C&AG. Would it mean any audit, any objection? In my humble view, if there is some damn audit, if there is an interim objection, you can't take that interim objection, because any audit objection has to be understood as the final objection. Because interim objection will be given, you will give the reply and they may drop the objection. So therefore, the word final in the objection as it appeared earlier was a surplusage. So objection is to be understood always as the final objection. It is necessarily built into the word objection. Now they have said it is any audit objection. Any audit means what? It can't be somebody who is not competent to comment as to whether the assessment has been made in accordance with the provisions of this Act. Who is competent to? C&AG may be competent. Your own internal income tax department's internal audit, that person may be competent. All other cases, they are not competent to make such comments. For example, you go for 142(2)A, appoint a CA for a special audit. He would comment that for some other year it is not properly made. He may go out of his brief and mention that for an earlier year also it should have been the same. But he is not competent to make any such observation. He has no authority vested in him to do that. And therefore, his comment, his objection cannot be taken into consideration. Now, is it objection on fact or objection on law? If you apply, Indian and Eastern newspaper 190 or 996, they have said that if the point on law is brought out by the audit party, it's just a matter of opinion. It can't be good enough tangible evidence for reason to believe. But now reason to believe is not there. They just said objection. Could there be objection on fact? Could there be objection on law? So end of the day, what is important is that whatever objection you would raise will have to culminate into a position that assessment has not been made in accordance with the provisions of this act. Some best estimate made. Though the audit party considers that 8% ought not to have been made, it should have been made at 28%. This cannot be brought in here. See, the pure subjective judgments of the assessing officer cannot be considered by the auditor here, because the pure subjective call by the assessing officer, though it may not be to the liking of the audit party, it cannot be stated that it is not in accordance with the provisions of law. Law will give him the power. In exercise of power, he has done that. So therefore, the various subjective calls taken by assessing officer cannot be objected here. Even if they're objected, it cannot come under clause 2. Then look at one interesting thing. They have said in accordance with the provisions of this act. They have not said rules. See, there are so many rules like, Rule 11 UA, forex conversion you have 115, foreign tax credit you have 128, depreciation rules are there. Now, if there is a breach of rule, would imply that breach of rule made under 295 will tantamount to breach of law indirectly, and hence will have to be taken. This has to be strictly interpreted. Parshuram Pottery's case. So the closed cases cannot be lightly opened, on which basis it is not unreasonable to take a position that the breach of law cannot be considered, breach of rule cannot be considered here. It has to be only breach of act. Now look at the third one, information collected under section 90 capital A. But then this has to be, they don't use the word in the case of assessee for the relevant assessment here. Those have to be written because the first proviso makes it mandatory. Then only the information collected and in respect of treaties entered into under only these two sections alone can be considered. Your Pandora leak, your Paradox papers, Paradise papers, Panama leaks, all these cannot be used here. Your CPCR, which is made under section 286 cannot be covered here. Your MLI and AP15 possibly could be covered if it is because whatever is done is considered to be done under the treaty. And as I said earlier, mere information does not suffice. Information should indicate escapement of income chargeable to tax. L&T versus State of Jharkhand always have to be kept in mind. So whenever you understand this word, information. Now coming to 135A, information made available to assessing officer under 135A. What is 135A? See, there are various sections in income tax which will provide for collection of information. You have 133A, 133B, then verification of information under 133C, inspection of register of companies under 134. Then the power of AO to be exercised by the superior officer in the context of inquiry. All these are now made phaseless in terms of 135A. And a scheme has been brought out called E-Verification Scheme of 2021 on 13/12/2021. It will provide for collection of information, sending it to verification unit for processing the information. In paragraph 4, subparagraph 12, it is dealt as to how to use this processed information. So what they say is if the processed information relates to pending scrutiny, that means the assessment is going on, it should be electronically made available to the faithless assessing officer or jurisdictional assessing officer as the case may be. If it does not relate to pending scrutiny, it shall be utilized for further necessary action in accordance with the Provisions Act, meaning what? For the purpose of 147 proceeding. So where it would not relate to pending scrutiny, it will be then sent to the faithless AU to proceed with issue of notice under 148A and take it logically in terms of section 151A read with section 144B. Last one is information which requires action in consequence of the order of a tribunal or a court. What do you mean by requiring action? Should the order say so? See, the language is not very elegant. Information that requires action in consequence of order of tribunal or a court. So, the moment there is a court order, it is but the duty of anyone to give consequence to it. But if it relates to non-income tax case, like there is a land compensation enhancement, there's a personal dispute where you ask for damages, interest would be awarded. There are so many non-tax cases which will have bearing on your total income. In which case, could it be called as information that requires action in consequence of the order of a tribunal or a court? Is a point that needs to be looked into. And compare this with 150. 150 has two limbs, in consequence of or to give effect to. Whereas here, only the words in consequence are used. Then they say order of tribunal or court. So it need not be under Income Tax Act. It could be under Income Tax Act or any other law. But there's certain open questions as to whether foreign courts and foreign tribunals are considered. Authority lower than the court or the tribunal cannot be covered. Authorities like Authority for Advance Ruling, Settlement Commission, DRP, GARP, Approving Panel, etc. cannot be called as court. Though they are quasi-judicial authorities having the power of court for some purposes, they are not court per se, and therefore you cannot use, the orders of these authorities for the purpose of subclause 5, clause 5 of explanation. So with this, we have briefly discussed explanation 1, which will talk about ISC, actual case of information suggesting escapement. Now let's go to the explanation 2. Deemed case of information suggesting escapement. Deemed case of information suggesting escapement. Here, it would not fit into explanation 1. It will just come under explanation 2. In which case, there is a fiction that is created. So, which are these two? Look at clauses 1 and 2. Search is initiated in your case, or a requisition is made in your case, is clause 1. Clause 2 of explanation 2, a survey other than TDS survey. So TDS survey leave out. It has got nothing to do with assessment of your income. Although indirectly it may have bearing on your assessment in terms of your non-compliance with TDS could translate into disallowance under 40A1 or 40A1A. But anyway, they have left it out. Earlier they had left out even expenditure survey, which they have earlier that included expenditure survey, which they have left out, meaning even expenditure survey will get covered under DISC. Now take a case where a mere search or a mere survey, would that mean there is a DISC and they should proceed? Take a case where the survey takes place in my place. Nothing is found. Search takes place in my case. Nothing is found. But there's a DISC. And he could issue notice on 148. And you would also notice that when there is a search, not the case of survey, when there is a search, even if nothing is found, it's a case of DISC, and they wouldn't even have to do the procedure of 148A in terms of proviso to 148A. They can straight away issue notice on 148. In which case, what is the remedy for you? The remedy is you have to go on a writ petition applying GK and drive shaft case. So though the GK and drive shaft principle is codified in a modified form by insertion of 148A, you would do well to remember that there are situations which are still not covered by 148A by virtue of proviso to 148A. In those cases, the principle of GK would continue to apply. Let us say a search has taken place in my case, DISC, and 148A is dispensed with. What he will do? He will straight away issue me notice under 148. Then I'll ask him, on what basis you have said that there is income escaping assessment when in my search nothing is found? Then he has to reply by a speaking order. If his reply is not to your comfort, you can take it in a writ petition. Sometimes what they do is, they'll conduct a search in a place, nothing is found, they extract an adverse statement, which you may later on retract. Same procedure will have to be followed. Because there's a board instruction saying that the search party should not insist on taking adverse statement. He has to focus on incriminating material. You cannot extract a statement, is what the board circular says. Now, look at third and fourth one. So third and fourth one are important. In somebody else's case, the search takes place or requisition takes place under 132A. Either assets are found which are found belonging to you, or the books of account and documents or evidences are found which are found pertaining to you, or the information therein is found relating to you. In which case, there is a case of deemed information suggesting escapement. But then, look at the language here. Assessing officer is satisfied with the prior approval of the principal commissioner. So it is not his ipse dixit that such has taken place in Mr. Sharma's place. So Chythanya should be issued the notice under 148 because there is a TISC. No. The assessing officer has to satisfy with the prior approval of principal commissioner. This is extremely important. Word satisfaction is important here. It is not something which is just stating so that I am satisfied. Look at the decision of Godrej and Boyce in 394 ITR 449, Maxop case in 402 ITR 640. In the context of 14A, where a similar word satisfied is used, they've said that it has to be a speaking satisfaction. You cannot be allowed to guess as to what may have been his satisfaction. So he has to be satisfied. And it has to be the prior approval. Who has to be satisfied? In our example, is it Eva of Sharma or Eva of Chythanya? So unlike in the case of 153C, where the first year satisfaction will have to be a Eva of the such party, here it is not Eva of the such party. So Eva of Sharma need not record the satisfaction. It is Eva of Chythanya, who is the other party. The Eva of Chythanya will have to record the satisfaction. This is extremely important. And prior approval of whom? The principal commissioner or commissioner, and not the specified authority. Look at this. For all other purposes of section 147 through 150, 151 will apply, which will deal with the specified authority, 3 years or above 3 years. If it is 3 years, X. If it is above 3 years, Y. Whereas here, if you would see, principal commissioner or the commissioner approval will have to be taken. And it's a prior approval. So as I've said earlier, writ remedy in terms of 148A would apply in two situations. One is a case where your case will come in the dispensation of 148A procedure by virtue of the proviso, which we are yet to discuss. Proviso to 148A, it is said that 148A procedure need not be followed, in which case I already told you that you can go to writ court. There's one more case where you could possibly go to writ court, is that he passes an order under 148A. He is supposed to hear you, consider all the materials, then he has to do an order saying that it is a fit case for issue of notice under 148. That has to be a speaking order. It has to give reasons. It has to be passed after hearing you. It has to consider objectively all the objections which you have filed. And if with all that their order under 148A doesn't even hint an escapement of income chargeable to tax, you can definitely challenge through a writ petition. With this, we can take a small pause if the delegates want and take a couple of questions, or if they're fine, I can proceed with 148A.
Dipesh, are you there?
Yes.
Can you ask the questions, because in between I'll miss the link, so I don't have all the questions.
In case the organizers feel that I'll have to take a couple of questions just to break the monotony, because I've been taking 1.5
Dipesh,
hours.
can you ask the questions from the list?
And kindly confine the questions only to topic which you have discussed so far.
Yes, sir. So there is one, this benefit of SC judgment. This is just a comment. Okay, Prakash. Sir, the question is a post notification dated 29th March 2022 is the jurisdiction now vested with the faceless assessment center to issue notice under section 148 from 29th March 2022? I think this is not the jurisdictional issue, sir, we want to take right now.
I don't think so, but the scheme very clearly says under 151A, scheme deals with issue of notice under 148A. Also will have to be done in a phaseless manner to the extent 144B will permit. So in all cases where under 144B2, there is a negative list, these are the cases that cannot come under phaseless. Barring that, rest of the cases, in my view, will have to be done phaseless only. Unless they, like modify the notification to 144B2 to say that these are the cases relating to reassessment, will have to be done manually. Yes, sir.
Sir,
Hello?
Yeah, Sharma ji.
Please. Yes, you finish it.
No, sir. The question in Q&A box are over. So I want to ask one thing. If we see the information which is flowing to the assessing officers, it is just copy paste data. For example, I can just tell you that there is an information that you have put. You have kept an FD more than 10 lakhs as per the information on the Insight portal, whatever. And based on that, the reassessments are, happening. And in fact, one of the assessing officers told us that when we say, and the assessing, for example, in one case, the assessee replied that this is my non-resident account in any case. Point number one, FD is not taxable. Point number two, in any case, I am a non-resident since n number of years. And there is nothing taxable in India. So without that, they are considering that they are reopening. And one of the officers told me that we don't have issue to power to once I issue a show cause, then I can't ask you for anything. I just have to pass the order as per system.
Oh, that is ridiculous. If then, once a notice under 148A comes.
148A, they are not doing. They are directly doing 148AB. And in B, they don't have anything to, ask question once again. Once you issue
just a minute.
Yeah.
Just a minute. Unless your case comes under proviso to 148A, which we are yet to discuss.
Okay.
In all other cases, it is mandatory for them. It is reiterated by Supreme Court in Ashish Agarwal's case that they can't issue directly 148 notice. That is very clear.
Recently in March in Mumbai, at least we have seen that they are directly.
That is illegal. That is illegal, and you have to challenge it.
Dipesh, we have to move.
Yeah.
Hello. Sir, excuse me. I got 2 phone calls. The participant said we are enjoying brilliant analysis, but then we also want Supreme Court judgment and that instruction. So sufficient time should be given to sir. So I leave it to you, sir. I should not say, but whatever request has come, I am convening you.
So fine, but I have to discuss 148A as well as 149. Because if I discuss 140,
10 minutes, you can then half an hour, we can 15 minutes, we can extend and complete that. Because see,
let me proceed with 148A. I will just try to make it as simple as possible and proceed. Okay.
Yeah, please, sir. Sorry to change.
No, I understand the time constraint. I understand. Ultimately, I have to play to the gallery. If the gallery wants that the Supreme Court decision has to be discussed, we have no choice.
Yeah, that's what they said. No, but though they are enjoying and they cited the case of state of Jharkhand, they said it's a very nice information. Then this ISC thing also. But they said we also want the Supreme Court, please.
Yeah, no problem.
Sir, only thing, if you can touch
Dipesh,
upon...
Dipesh, now the question afterwards, because time is not there. The 5 minutes last, we'll see. Okay?
Okay, sir.
Yeah.
Okay, now let's look at 148A. See, 148A has 4 clauses and a proviso. The 4 clauses of 148A, which is titled as conducting inquiry, providing opportunity before issue of notice under 148. That is the title of the section. Now, 148A has 4 clauses. Clause 1 says, AO can conduct inquiry, if required, with the prior approval of the specified authority with respect to information which suggests that the income chargeable to taxes escaped assessment. Meaning, he can go ahead and carry out an inquiry, fishing, rowing, yes, permissible, provided he has taken prior approval of the specified authority. Now, if you look at Supreme Court decision in Ashish Agarwal's case, this prior approval of specified authority was dispensed with by Supreme Court as one-time measure in respect of all the notices that were issued up to 4th May 2022. So they dispensed with this. They have said no need. Anyway, it is a choice of AO. Even if you had carried out the prior, without the prior approval, any inquiry, we will condone it and it has to be taken as valid. This is one part. Look at this second part. This is important. Provide an opportunity of being heard to the assessee by serving upon him a notice to show cause within such time as may be specified in the notice, being not less than 7 days but not exceeding 30 days from the date of such notice is issued, or such time as may be extended by him on the basis of an application in this behalf, as to why notice under 148 should not be issued on the basis of information which suggests that the income chargeable to tax escaped assessment in his case for the relevant assessment year and results of inquiry conducted, if any, as per clause A. Now look at this important. See, AO has to provide you an opportunity. He has to give you a show cause notice. In the show cause notice, he has to give you not less than 7 days time, but not more than 30 days time in the first instance. But then as an assessee would ask for more time, he can grant you even beyond 30 days, but he cannot suo motu extend the time limit. That power is not there. Now, in the show cause notice, he will ask you, hey, tell me why 148 should not be issued to you on the basis of information which suggests that income chargeable to tax escaped assessment in your case for the relevant assessment year. That means he has to give you this ISC. If he does not give you the ISC, or if he would not share you the result of the inquiry conducted, then the proceeding is vitiated and is liable to be quashed in a writ proceeding. So the very fact that at the end he gives you a show cause notice as to show a cause as to why 148 should not be issued on the basis of ISC and on the basis of results of inquiry conducted under clause A, meaning that both will have to be shared. Now, one important thing is to be noted here. There's an amendment by FA 2022. Prior to amendment, even providing an opportunity of being heard to the assessee will have to be with the prior approval of the authority. That means even a notice under 148A ought to have been with the prior approval of the authority. What Supreme Court in Ashish Agarwal said is, notice under 148 is deemed to be notice under 148A. And they have said you have all the defenses available to you, but they're not dispensed with this prior approval thing. Unlike in the case of clause A, where as one-time measure, the dispensed with the prior approval of the specified authority. In the case of clause B, they are not dispensed with it. They only deem that it's a notice under 148A. Now, I would urge all of you, whenever you subsequently legally proceed against the proceeding post Supreme Court decision, you take this ground. Supreme Court may have deemed it to be notice under 148A, but they are not dispensed with prior approval. The prior approval where they intended, they dispensed only in the case of A, not in the case of B. I know it may not be very, it looks aggressive because Supreme Court has said it is deemed to be notice. They have not said it's deemed to be a valid notice under 148. And they also said you have all the defenses available. So why not make use of this defense if it helps? Anyway, additional ground wouldn't cost you any extra money. In clause C, he has to consider your reply and he has to decide clause D on the basis of material available on record, including reply of the assessee, to decide as to whether it's a fit case for issue of notice by passing an order with the prior approval of the specified authority within 1 month from the end of the month in which the reply referred to in clause C is received by him, or where no reply is furnished within 1 month from the end of the month in which the time allowed or extended, expires. So there's a time limit. He has to pass an order, whether it is a fit case or whether it is not a fit case. It looks like either way he has to pass an order. And if he passes an order saying it is not a fit case, well and good. If it does not pass an order within the time limit, he will become functus officio. He will not be permitted to pass any order. The question is, if it does not pass the order, could it be deemed to have dropped the proceeding? Is an issue. Whereby subsequently, for the very same aspect, he should not be issuing one more notice. So because you will have 3 years time and 10 years time, you would give reply under 148A. He will not do anything. He will allow it to lapse. If he passes an order saying it is not a fit case, he cannot review it later on because he doesn't have power to review the order under 148A. So what if he would not pass any order and he will allow the time to lapse? Can he come back again on the self-same information by saying that we are not passing an order cannot tantamount to passing an order that is not a fit case? This could be an issue that would arise, which we'll see how the courts will look at it. I would think that on the very same material he cannot do, because of Parshuram Pottery decision, he cannot keep troubling you in respect of very same thing, unless it is a different case of ISC. See, originally he may have issued 148A on one ISC, which he would not pass any order. He would have become functus officio. Subsequently, for the very same ISC, he cannot do. If some other ISC will come in, some information under 1990 capital A would come in, possibly he may be justified in proceeding to issue notice under 148A. Now, this is most important. In these 4 cases, 148A procedure is dispensed with. First 3 cases are just the same as you have seen as the explanation 2. Survey is conspicuously absent here. So in the case of survey, there is a deemed case of information suggesting escapement, but he has to follow procedure of 148. That he has to follow. But in the case of search, requisition, and third-party search, whatever I explained, those cases, it will overlap between explanation 2 to section 148, that is deemed information suggesting escapement, and proviso to 148A, which will deal with dispensation of procedure of 148. I'll repeat again: for search, for requisition, and third-party search. So you have, like a double whammy kind of a situation. First is, there is a deemed information suggesting escapement. Second is, you are out of procedure of 148. In the case of survey, only single whammy. There is a case of deemed case of information suggesting escapement, but 148A is not dispensed with. Ever will have to pass 148A. Now with this, I've just done the reconciliation between this explanation 1 to 148, explanation 2 to 148, and overlapping cases are these 3. Non-overlapping cases, one is survey. Look at the other one. The information that is collected under scheme notified under 135A is coming as actual information suggesting escapement under explanation 1. It is not DISC, it is ISC. However, 148A is dispensed with for it. The moment there is a processed information coming to the assessment unit under 135A, they can straight away go ahead and issue 148 notice. This is what I guess earlier the question was being asked. See, if the AO has issued you directly 148 notice without following the procedure of 148A, it could have been possible if he had received the information under section 135A. Now, this is one important section, though we tend to ignore it. Look at the language of the section here, 148B. They say, no order of assessment, reassessment, recomputation under this act. They are not said under section 147. no order of assessment, reassessment, recomputation under this act shall be passed by an AO below the rank of a JC, except where the prior approval is taken. So there could be a situation where a normal assessment, could happen even in the case of search. For example, assessment year relating to the previous year of search could be normal assessment. It could be done by the central circle. But language of 148B is no order of assessment, reassessment, recomputation under this act, which will include even the normal assessment under 143.3. If your case comes as DISC under 148, explanation 2, the moment your case comes under DISC, even the regular assessment done for the relevant assessment year of search, it could be argued that because my case comes under DISC under explanation 2 to 148, it has to be passed by an officer not below the rank of JCAT. Keep this in mind. In a given case, if the deputy commissioner passes the order and there is no JCAT who passes the order, you could possibly take it as a defense for the even regular assessment as well. Now, this is important, and Supreme Court decision also will have to be looked at here. And this is extremely important because of amendment made by FA 2022. See, time limit is different from what it was in the older regime. What is the normal time limit? 3 years from the end of the relevant assessment year. It's very good. 3 years, not 4, 6, and 16 years in the past. Just 3 years. But then they can go up to 10 years if assessing officer has in his possession books of account, other documents or evidence which reveal that the income chargeable to tax represented in the form of an asset. It was just an asset then by FA 2021. Now FA 2022, happily they have inserted 2 more clauses. Represented in the form of expenditure in respect of transaction or in relation to an event or occasion, or any entry or entries in the books of account, which has escaped assessment, amounts to or is likely to amount to 50 lakh rupees or more. This is where we have the difficulty. Now then there is a proviso. This proviso would apply for assessment year up to 21-22 past. 21-22 and past. Where they're trying to say that if for these assessment years, you cannot issue notice under 148 if as per then existing time limit under 149(1)(b). Then existing time limit under 149(1)(b) was only 6 years. If that had lapsed, then for the years up to assessment year 21-22, you can't take recourse to 10 years. See, 3 years anyway will be available. 10 years you can't go up to 21-22 assessment years. You can go only up to 6 years. This provision like an asset represented in the form of an asset, expenditure, entry, etc. would not apply up to 21-22. All this will start troubling you post 22-23 onwards. Now there is one more proviso, which anyway is not very important here. And that's about the search which took place prior to 31st March 2021. They have to proceed under 153A and 153C. They will not have to come under this. If the search has taken place prior to 31st March. If the search has taken place on or after 1st of April of 2021, but if they want to rake up the prior years, that means 21-22 and prior, the first proviso will rescue you if it is beyond the time limit of 153 and 153C as then existing. So that is how it works out. Then the third proviso is important here. You know that he has to give you not less than 7 days, not more than 30 days time, correct? When he picks up under 148A. plus he may extend time at your request. So this will be excluded in computing the time limit. Supposing he has given you 10 days. You are not sought for extension. So 10 days will get excluded from the limitation. Like your explanation 1 to 153. That is how it works. Explanation to 153. The extension. No? One important thing is, what is excluded here is the time is granted and the time is extended at your request. He cannot extend from his end suo motu. That he can't do. 2. Please understand carefully. Under 148A, clause D, he will have time of 1 month from the end of the month in which you furnish the info, or from the end of the month in which the time allowed to you expires. That time is not excluded. Only the time granted to you is excluded, not the time taken by him to pass order under 148 AD. So my reading of 148 AD suggests that, or rather 149 third proviso suggests that the extension of time is only for the time granted, not for the time availed by him to pass the order under 148 AD. So this is something which may have to be noted. In the after exclusion, the available number of days is less than 7 days. It has to be extended to 7 days, similar to what you have in 153 explanation, where if the after excluding time limit, if the balance number of days is less than 60 days, it has to be replenished up to 60 days. So this is important one. The defined asset. Assets shall include immovable property being land, building or both, shares and securities, loans and advances, deposits in bank account. Now they have subsection 1A. I will come to subsection 1A a little later. Let us finish subsection 1 first. Now, as I said earlier, 3 years or 10 years. But 10 years have 3 situations: asset, expenditure, entry. Now, I've already explained you 149 1A. Now let's look at the issues concerning time limit. It's extremely important. What is the applicable law? Applicable law has to be seen at the time when you would issue notice under 148, because the time limit of 149 is not for 148A. Time limit is for 148. At that time, what is the law? At that time, if the law which then existing had already led to the lapse of the time limit, that the extended time limit would not apply. So this is what the Supreme Court has unequivocally stated in S.S. Gadgil's case, K.M. Sharma's case. Extension would apply if only the prior time has not lapsed. If the prior time has lapsed, extension would not revive the case. Now, how does it apply to you? Look at this, extremely important. In FA 2021, for 10 years, they had only one exception. That is, income chargeable to tax is represented in the form of asset. That's all. Other entries were not there, like expenditure, entry or entries in the books of account were not there. That means whenever they issued notice up to 31st March of 2022, in only one case they had the benefit of extended time. In all other cases, it would lapse. For example, all assessment years up to 1819, which are non-asset based cases. See, asset-based cases, they will have 10 years time, as I've said earlier, because that was the law as then existing under FA 2021. Now, all assessment years up to 1819, which are not assessed-based cases, they expired by 31st March of 2022. The new amendment came in with effect from 1/4/2022. Therefore, the new amendment of expenditure-based, entry-based cannot be applied to assessment years up to 1819. Now, you apply this in the light of Ashish Agarwal's case. What has Supreme Court said? The notices issued under 148 shall be deemed to have been issued under 148A. Correct? For what years? They are to be issued for all the past years. The years which were before the Supreme Court could be assessment year 17-18. For those years, it lapsed by 31st March insofar as it is asset, non-asset based. So that means in all those 90,000 cases, forget the case of 3 years. In all those 90,000 cases, which would not get covered by asset, but get covered by expenditure or entry or entries in the books of account, cannot be now reopened. So this is where you will have to, apply this principle that non-assessed based cases, time limit have expired within 3 years, that is 31st March of 2022. Now, let's look at when he can invoke this, 10 years. He should have in his possession books of account or other documents or evidence. He should have in his possession this. So it cannot be just a hearsay or whatever. So books of account and other documents or evidence should themselves reveal, not his, ipse dixit. Documents should speak. The question is, should these books, etc., be beyond what assessee had himself furnished? Can assessee argue that these books were already with you? The plain language doesn't seem to suggest that it is confined to books which are available with him without the aid of the assessee. According to me, it would even include what assessee has furnished, because he is in possession of that. Now, look at these 3 exceptions. First is on the basis of the books of account, other documents or evidence. It reveals that the income chargeable to tax represented in the form of an asset which has escaped assessment amounts to or is likely to amount to 50 lakh rupees or more. Now let's look at 3 items separately. As I said earlier, up to assessment year 18-19, only asset-based cases would survive for 10 years, as I said earlier. Now we will understand for 1920 going forward and examine these 3 situations of escaped income represented in the form of an asset, escaped income represented in the form of an expenditure, escaped income represented in the form of an entry or entries in the books of account. These 3 we are examining. Now, take the first one. Should the asset exist at the time of issue of notice under 148? Unlike Black Money Act, where board went on to say that undisclosed foreign asset, even if it doesn't remain in the form of an asset, it would still be there. That cannot be applied here because language is very clear. It is represented in the form of an asset. So at the time when I issue notice under 148, to check the time limit, I have to see whether the escaped income is represented in the form of asset. That means escaped income should be invested in such asset. Now, very interestingly, they have used the word an asset. An asset. And I don't know for what reasons in FA 2021, they just use the word asset. In FA 2022, they have substituted word asset with an asset. An asset means what? Would it mean multiple assets? Would it mean your escaped income being invested in each asset should exceed 50 lakh? Because if you look at the third item, they have said an entry or entries in the books of account. Very clearly they have said. So in the light of this, in the light of fact that they have consciously amended what was in 2021 as an asset in 2022, Section 13 of the General Clauses Act, which will deem referent to singular as referent to plural, would not apply because a different context is provided here. So the fiction of Section 13 would apply, the presumption of Section 13 would apply only when the context does not otherwise require. So context is clearly otherwise requiring here. If a singular were to refer to plural, they need not have used entry or entries. what was asset in FY 2021 need not have been substituted with an asset. So therefore, it is not unreasonable to argue that in an example where I have an undisclosed income of 1.2 crores, I have invested them in the very same year in 3 assets of 40 lakhs each. I would argue that I am not covered by 10 years limit. Now you compare this with the language of 269 ST. Now some of this language is same as that. If you look at 269 ST, which will prohibit receipt of any cash, it says no person shall receive an amount of 2 lakh rupees or more in aggregate from a person in a day in respect of a single transaction, in respect of transaction relating to one event. So here, they are not used the word a single asset, but they have used the word an asset. And they have substituted what was asset as an asset. So therefore, 269 ST cannot be applied here. And on its own, it has to mean each asset will have to be understood. Now, change in the form of asset, is it a criteria? I had originally earned some undisclosed income, put it in the form of jewelry, and at the time when you will issue notice under 148, it is converted into real estate. That may not be criteria. Now take a situation where an asset representing partly escaped income and partly non-escaped income. He finds that I have one asset, one house. He finds that a portion of it is coming from escaped income, balance is disclosed. But then interestingly, they are not used the words wholly or partly here. They are not used the word wholly or partly here. Unlike in 4th proviso to section 153A, if you see there, just see this clause A, look at the last line, in aggregate in the relevant assessment years. So words like these have not been used. Like in the 4th proviso to section 153A, where this language was first found in the 4th proviso to 153A, which is now copied to some extent in 149(1)B. Therefore, wholly or partly, if part of your asset is found in the form of an undisclosed income, you could argue that this clause would not apply. An asset cannot be understood as more than one asset. At the same time, it cannot be understood as part of an asset. See, these are all interesting points to argue. Don't take whatever I've said as sacrosanct. You'll have to argue, try your luck out. This is my opinion. Any other person can definitely have a different view of it. And such views are most welcome here. But then as lawyers, we have to find out the loopholes and try to make best out of it. Now, asset is defined. Actually, asset need not have been defined. They're gone ahead to define asset. Asset shall include immovable property. Is immovable property otherwise not an asset? Share and security, are they not otherwise assets? Loans and advances and bank deposits, are they not assets? They are assets. But why have they said so? So they have not said asset includes. They have also not said asset shall also include. They have said asset shall include, meaning asset is capable of having a very large and wide meaning, but for the purpose of this, it will include only immovable property, land, building, share, security, loan and advances, and bank deposit. It would not include your crypto. It would not include jewelry. Is one argument. Just, you'll just have to try, as I said earlier, try your luck out on this argument. With this, now let's go to next item, expenditure. So if you look at expenditure, the language used is represented in the form of expenditure in respect of a transaction or in relation to an event or occasion. Same logic would apply. I'm aware, mindful that in 54 we argued A means any, many. And that is where, the court said that you could, invest in many houses and get it, and later on they amended. But that was the context in which 54 had to be understood beneficially as a rollover. Here is a case where revenue is trying to attack you in respect of a concluded assessment. So this requires a stricter interpretation, whereas 54 requires a more beneficial interpretation. Don't worry about Dilip Kumar. Don't worry about the Ramnath's case. We have the decision of Mavilai in 431 ITR. which says that even the beneficial provisions will have to be interpreted in a liberal manner, keeping in mind the intent and purport of the beneficial amendment. Now, expenditure here referred to actual expenditure. If it is found that you have an inflated or bogus expenditure, you cannot say the income is represented by expenditure. Expenditure has to be real expenditure. But then, if you passed a bogus entry, it could be covered by third item, entry or entries. Now, various things could get arguably covered here. Revenue expenditure treated as capital in the reassessment could possibly be covered. Expenditure actually incurred but disallowed on account of various reasons like 41A, 41, 43B could also be covered. Expenditure could be business or non-business. But TP cases cannot come here. The reason is, in a typical TP case, arm's length price could not be determined by AO. When he will issue the notice under 149, he has to accept, unless disturbed, the transfer price declared by the SSC to be at arm's length. This is a technical exercise which could be carried out by TPO only after reference to him under 92 CA 1. Therefore, TP cannot be taken here to say that, extended time of 10 years could be taken. Even without prejudice to that, let us say if TP will result in enhancement of income, add income from an associated enterprise of 5 crores. Now, let us say he will say it is 8 crores. The incremental 3 crores, is it represented by an asset? No. Is it represented by an expenditure? No, it's an income transaction. Is it based on an entry? No, my entry is only 3 crores. So it is not based on entry. It is based on no entry. And therefore, TP enhancement of income may not get covered. TP disallowance could be covered if you would not accept my argument that TP cases as such cannot be covered. Let's say I have incurred an expenditure with an AE for 5 crores. He will make it as 4 crores under 92 CA. That 1 crore will represent, because I have booked my expenditure as 4 crores. So 1 crore is represented by an expenditure or entry in my books of account. But however, if you understand expenditure as a single expenditure, each international transaction, it has to exceed 50 lakh. That way you can attempt to neutralize it. Now coming to the third one, entry or entries. So here is where, there could be multiple entries. Unlike in the case of asset or expenditure in respect of a transaction, here not just the word entry is used, even entries is used. So it applies only when the books are maintained. If you don't maintain books of account, you are out of this clause. So it will cover various things. It may cover bogus or inflated expenditure. It may cover exempt income, like agree income not accepted. You have passed an entry in your books of account on agree income, if you maintain books. Additions under 5627B, angel tax also could get covered. Adjustments to book profit arguably could get covered. Now, these are the situation. Now, let's go to 149(1)A, which I will not take up now because this will take some time, because 149(1)A is highly technically worded. It will take at least 15 minutes. Now, Mr. Sharma ji?
Yes, sir.
This 149(1)A, I have some very interesting thing, but it will take some time.
No, sir, then we'll come to Supreme Court and
I think we'll skip it and go to Supreme Court.
Yes, sir, please.
Okay, sir. Sir, what did Supreme Court say? It dealt with, according to me, 3 situations. One is, or rather 4 situations. One is where High Court has held in favor of SSC and department is in SLP before Supreme Court, in Ashish Agarwal and batch. Another one, High Court has held department is yet to come in appeal, which in their estimate is about 9,000 appeals. Sometimes the statistics are used, like to influence the minds of judges. The moment you say 9,000 appeals will flood the Supreme Court is already, flooded with cases all across the country. So this is a very interesting strategy, which is very well adopted to make Supreme Court exercise its extraordinary power under 142, which can be done only when there is ambiguity in law. So Supreme Court has clearly agreed with all the High Courts and said they are in perfect agreement with what High Court has said. So where is the question of ambiguity? So, and they've also said that the new provision is in public interest. In fact, Supreme Court at one place said, new provision is in public interest. So when a new provision is in public interest, a new provision is perfectly right and the department is completely unjustified, in my humble view, the Honorable Apex Court ought not to have invoked Article 142. Okay, leave that as it is. Now they have done it. It is fait accompli. We have to now look at review petition. Now come to the various types of cases. First is a case where they are already in Supreme Court. Second is a case where the High Court decisions are yet to be taken to Supreme Court. Third is the decisions where the High Court, it's pending in High Court. Fourth is a situation where it's not taken in, it's not challenged. Direct. What Supreme Court appears to say, and as is understood by the board instruction, that it applies to all four categories, irrespective of whether it is challenged or not. Now let's take each one of that. What is already before High Court, Supreme Court, plus what is already decided and where the department is yet to file appeal. The Supreme Court told the department you don't have to come in appeal in respect of the 9,000 matters. So they say all the orders of High Courts rendered stand modified. How do they stand modified? You would have already known by now. They are deemed to be notice under 148A. There are no more notice under 148. They are deemed to be notices under 148A. And 148A clause A, prior inquiry, prior approval is dispensed with. 148AB, the prior accrual that was required during 21-22 is not dispensed with. This is something which I've already discussed. And then they said the AO will have to furnish the information within 30 days. You have to respond within 14 days. And then Supreme Court, the AO will have to pass an order under 148AD with the prior approval of the specified authority. Then go ahead and issue notice under 148 if so warranted. Now, see, these are cases where High Court has already held first two cases, first two batches. High Court has already held, you are coming appeal to Supreme Court. Department is coming to appeal to Supreme Court. Second batch also where they are not coming to come in appeal before the Supreme Court also. Supreme Court said High Court order stand modified. Now High Court order stood modified. But you have to see the third proviso to 149, which will say that the time, if you go to 149, rather the fourth proviso, it says, for the purpose of computing the period of limitation as per this section, the time or extended time allowed to the SSC as per the show cause notice issued under 148B, and the period during which the proceeding under 148A is stayed by an order or injunction of any court shall be excluded. So these are the cases where High Court has already passed the order. And before they passed the order, there would have been stay. But subsequently, they have passed the order. Much later, Supreme Court has decided to modify those orders. Now, could you say that till 4th of May, there was a stay of proceeding under 148A in respect of orders which already stood passed by the High Court? Because High Court may have granted interim stay before it passed. And once it passed a final order quashing the notice under 148 under old regime, saying that it's illegal, the interim orders stood merged. So, according to my humble opinion, only during the period during which the respective High Courts had granted interim stay could be excluded. For example, take Ashok Kumar Agarwal's case. Assume that Ashok Kumar Agarwal's order was passed in, just assume, I may not be correct on date, so that's why I'm assuming, on 30th of November of 2021. In between, it had granted stay for 3 months. But once 30th of November of 2021, the order is passed by the Honorable Allahabad High Court, the interim stay also automatically stood merged. It did not survive anymore because the main relief itself is granted. So according to me, when Supreme Court now modifies the order of Allahabad High Court, only during the time it had stayed that 148, which is now deemed to be 148A. See, what was issued by department was 148. What High Court stayed was 148 notice. But because the Supreme Court, that 148 notice is deemed to be 148A notice. And therefore, even if you assume that for the interim stay granted by Allahabad High Court for 3 months is an interim stay in the context of 148A, even then, the stay cannot go beyond the date of order of Allahabad High Court. So therefore, in my humble opinion, in all the cases where the High Courts have passed the order, where the interim stay became lapsed, for whatever reason, from the date of High Court order, limitation cannot be extended. The number of days after the date of pronouncement of High Court order till 4th May 2022, when the Honorable Supreme Court passed its order in Ashish Agarwal's case, it cannot be excluded. All these the Supreme Court has categorically stated that you can take all the defenses, including time limited 149. This is one aspect. Now, take a look at the third category where, like in, for example, Hyderabad High Court, Telangana High Court, the interim stays are granted, they are yet to decide. So now, interestingly, interim stay has been granted under 148, but as I've said earlier, it has to be construed as granted under 148 because 148A, because those notices are now deemed by the Apex Court to be under 148A. So then there, possibly the fourth proviso to 149 would extend the limitation of time. Next aspect is what Supreme Court has said is notices issued under 148 shall be deemed to be notices issued under 148A. Within 30 days, you'll have to give the information. What information? It has to be information suggesting escapement of income. It cannot be your old reasons to believe. Because in those cases, the notices under 148 would have been issued on the basis of reasons to believe. So those reasons to believe don't survive now under the new dispensation, as Supreme Court said. So within 30 days, the assessing officer will have to invent information suggesting escapement. The two, as was defined during the period between 1/4/2021 to 31st March 2022, only two items. Information flagged according to RMS and final objection of C&A. No one else and no other case. So what department has to do now is, it has to discard reasons to believe. It has to look at RMS and see as to whether it could be called as information flag. If it is not able to so do, then its notice under 148A will be bad. Because order under 148, notice under 148A, B will have to accompany information suggesting escapement of income. In the absence of that, it's not possible to go ahead with that. I think then I'll go to last point here. Already gone up to 8:15. Let me now go to the board instruction. Something the board seeks to say, which I think we have to seriously challenge. If you look at para 6.1, third bullet point. So the instruction says, the Honorable Supreme Court has upheld the views of High Courts that the benefit of new law shall be made available even in respect of proceedings relating to past assessment years. Up till here, no problem. Decision of the Honorable Supreme Court, read with the time extension provided by TOLA, will allow extended reassessment notices to travel back in time to the original date when such notices were to be issued, and then new section 149 is to be applied at that point, which according to me is completely erroneous. 149 does not apply to 148A, it applies to 148. And Supreme Court has clearly said that the 148 notice earlier issued is deemed to be notice under 148A. That means the earlier notices titled as 148 do not survive. So therefore, at the most, what department may do is they could get TOLA extension up to 30th June of 2021 and fourth proviso to 149, which says the time during which the proceeding under 148A is stayed. which I've already explained a little ago. In all other cases, according to me, the board's understanding that it will travel back in time to the original date when such notices were issued is completely incorrect and misconstruction of what Supreme Court has said, and it's an overreach of what the Supreme Court has said. So with this, I think I would conclude. I'm sure there may be so many other points you would have loved to discuss. So two things I have not discussed. One is 149 1A, which is very, very interesting, but I don't want to do it in a hurry. It takes time. There are a lot of interesting aspects there. So with that, I would conclude, Sharmaji. Thank you very much. Yes. I would thank, I'll be failing my duty if I don't thank my colleagues who have spent good amount of time in pulling out a lot of points. Yes.
Sir,
yes, sir.
I asked in the beginning, I said that 1314 and 1415, and that as you rightly in your presentation said that proviso in section 149, that if 6 years have elapsed, then it cannot be reopened. Exactly. But then here they are saying it is possible that 50 lakhs limit they have applied in the instruction. What is your view, sir?
Sir, as I said earlier, up till 21-22 assessment year, the very scheme of represented by an asset would not apply beyond 6 years. It will not apply beyond 6 years.
Okay. No,
see,
what I'm saying,
what they are trying to do is take 1314, for example. 1314 expired when 31st March of 2020. Correct?
Yes, sir.
That event TOLA came in. That event TOLA came in. Okay.
Yeah.
Now, what they're possibly trying to say is, if 1314 is a case of being represented by an asset, correct, sir?
Yeah.
Then you won't come under 149 1A of 3 years. You will come under 149 1B of 10 years, correct?
Yeah.
But then when you apply the first proviso, the 10 years stands slashed to 6 years, correct, sir?
Hmm.
So 6 years will end on 31st March of 2020.
And with TOLA 21.
By which time the TOLA came in. See, TOLA operated from 20th of March of 2020 till 31st March of 2021 insofar as reassessment is concerned.
Yeah.
It stood extended to 30th June of 2021. But then it's just that it extended up to 30th June of 2021. Beyond that, it is not extended, because unless there is a stay by the High Court, where order is already passed, only that period of stay, like I gave you the example of Allahabad High Court passing the order on 30th November. I gave you that example. Only in that context. Yes, sir.
So is it not that, sir, that 6 years time limit had elapsed and it was time barred, so now they cannot take it for 13, 14, 15, 16, 14, 15?
So all the assessment years up to 21, 22. Okay, sir?
Yeah.
If they are invoked during 21, 22, and if it is a case of represented by asset exceeding 50 lakh, they will have up to 21, 22, 6 years time from the relevant assessment year, subject to TOLA.
Okay.
Yes, sir? Subject to TOLA.
Yeah. Sanjay, are there other questions? One, Mr. Anuj Goyal has raised his hand. So 10 minutes will take questions, so people are satisfied.
5 minutes will take, sir.
Yeah.
I've been speaking for a little too long. Yeah.
Yeah, yeah.
Deepesh, 1 second, can you take?
The questions are relating to the earlier discussion on the
no, but
part.
take on Supreme Court only. Tell the members to take. Otherwise, they can send the question and then we'll just see how can we deal with that. So, Mr. Anuj Goyal has raised his hand.
I will allow him to speak.
Yeah. Just allow him.
Anuji, you are unmuted. Please restrict yourself to only the Supreme Court related questions.
Actually, I've posted my query in the Q&A box also. It is not related to Supreme Court decision, but a general query related to the filing of return of account. So
because only 5 minutes and people are interested in Supreme Court, can you just we'll see, you can just post it to the chamber, then we can see how can we deal with that. So
okay, sir, I have already.
Yeah, please.
Q&A box, please request you to.
Yeah. Sir, this inquiry to be dispensed with, and but then this three
inquiry is not dispensed with. Inquiry is not dispensed with. Prior approval by the specified authority is dispensed with.
Oh, sir, inquiry in one paragraph they also say.
That is anyway, there's no question of dispensation because Supreme Court has said that it is the discretion of the AO.
Yeah, but
it
then
is the discretion of the AO.
Our understanding was inquiry if required. So our understanding was in search and seizure cases, it will not be required. In all other cases, it is required. Is that understanding correct, sir?
Sir, that understanding may not be complete because in all the cases of ISC, inquiry is not a must because inquiry is only when warranted. See, normally, as you would know, if you look at the decisions of Lakmani Mewal, if you look at the decision in, like 82 ITR 147, if you look at various decisions, fishing and drawing inquiry generally is not permitted. So ISC is good enough to, should be good enough to sustain. It's only in a case where, for example, they may get some information under section 90 that I have an account in Cyprus. And through the automatic exchange of information agreement, I get some info that some Cyprus bank account is there. I may have been a non-resident. So just that, they can't issue a notice. So they may want to make an inquiry. So in all cases where, according to me, contrary to your understanding, according to me, inquiry is not by rule, it is by exception. That is why they have brought in intervention by specified authorities prior approval.
Yeah, Sanjay or Dipesh, you have any questions?
Sharma ji, I have seen, I have gone to the questions regarding this Ashish Agarwal case. Most of the issues have been covered by Chythanya sir in his discussion.
Okay.
So I think the queries have been answered.
Okay.
Deepak, still you can take this thing, copy paste and take it so that if reference can be done afterwards.
Yeah, I'll copy the questions.
Yeah, thanks.
Okay.
Sharma ji, I think we can end now.
I think if we can allow only if we have unmuted Anuj ji. So his question was that whether we can file ask for additional time to file return of income under section 148. That is additional time then provided in such notice to file the return.
Whatever was,
more than 130 days.
Yeah, I can answer this question in this way. Whatever was the earlier law, that part of law has not changed. Right? See, and the older regime prior to 1/4/2021, if you could have asked for time, if you could have granted time, if you could have treated as a return valid, then that should be fine. There is no change in law in that regard. I would anyway feel that, in case there's a delay of filing a return of income, you just have one condemnation application so that, you should not treat that, yours is a case of 144 that you not filed the return.